If you are a small business owner considering various funding options, you might want to hear my Fundera review. Fundera not only originates loans, but has a network of lenders that allow them to offer 8 different loan types. If your small business needs a convenient source of rapid funding, you'll want to hear the details about this popular alternative lender. I'm Gordon Scott. I'm a small business owner. I'm not a licensed credit advisor. This review is my opinion only and is not sponsored by Fundera. It is sponsored by FinImpact.com. FinImpact.com is a must-read website for anyone researching alternative lenders and other small business tools. There you can find information about a wide variety of loan types and the companies that provide them. Fundera is an alternative lender that got its start in 2013 in Genoa, Italy. More recently, it was acquired by NerdWallet in 2020. Now it operates as a wholly owned subsidiary of NerdWallet. Along the way, they've managed to make over $2.5 billion in loans to customers. My review will tell you about the 8 different types of loans they offer, their strengths, their weaknesses, their application process, their rates, and lastly, I'll share with you some information about what customers have to say when working with Fundera. Fundera is best known as a loan marketplace or loan matchmaker. Some people have the idea that they only connect people up and they don't originate loans. That's not accurate. From what I've been able to gather, they do originate loans from time to time, but the majority of their loans are matched up with third-party vendors. And that's why they can offer so many different loan types. They offer small business administration loans, short-term business loans, business line of credit, equipment financing, invoice financing, startup business loans, and merchant cash advances. Small business loans can be any amount from $5,000 to $750,000. To qualify for these loans, a company or individual applying for the loan should have a credit score of over 500. However, Fundera works with some of its partners that have programs that allow for loans to people with even lower credit scores. So you can see they're interested in working with just about anybody. Businesses applying for loans should have an annual revenue of over $12,000 at a minimum and also should have been in business for at least 6 months. As you can see, these requirements are not very stringent. So you can expect that Fundera probably has a loan solution for just about any business. Merchant cash advance loans are a particular strength of Fundera. These loans have a flexible repayment structure that allows you to pay the loan back depending on how many sales you make. That way you're less likely to run into a cash crunch in inventory and sales fluctuations. Merchant cash advance loans are available to businesses that show at least $5,000 a month in credit card sales, have credit scores over 500, and have been in business for 6 months. Now, while the requirements for loans from Fundera are not stringent, I need to point out that, like any alternative lender, there's a flip side. Yes, it's not difficult to get these loans, but it comes at a cost. Fundera loan products are not cheap, but they are available and convenient to apply. In the long run, if the money you make from these loans is the difference between growth and stagnation, then it might be worth it for you. The small business owners that make these loans succeed are those that have a very clear understanding of the cost of the loan and their opportunities. Just plain optimism is not enough. Go into these loans with eyes wide open. The maximum repayment window varies depending on what kind of loan you get, but for short-term loans, it's just 18 months. So you can see these are loans intended to be paid back quickly after you take them. Now, merchant cash advance loans don't have a term length, but their factor rates get higher the longer it takes to pay the loan back. Let me give you an idea of the general range of interest rates that Fundera offers for their different loan types. Small business administration loans tend to start at 8.5%. They may be higher depending on your credit score and other circumstances. Business loans, such as term loans or lines of credit, will have a range of anywhere from 7% to 30%. Equipment financing may be as low as 4%, but can be as high as 40%. Invoice factoring may start with a 3% initial interest and run at a rate of 1% per week thereafter. Short-term business loans, usually 1 year or less in time, are approximately 10%, and merchant cash advance loans, when they're completed, tend to end up somewhere between 10 and 50%. So as you can see, these rates, typical for an alternative lender, are not cheap. Now let's look at the process of applying for a loan with Fundera. The whole process takes less than 10 minutes, and if you're approved, funding can happen in as little as 24 hours after that. The pre-qualification application does a soft credit pull. Now, you might not know the difference between a soft or a hard credit pull, so let me give you a quick explanation. A soft credit pull, as explained by thebalance.com, does not affect your credit score. It's actually a mechanism that banks use for pre-qualification. They look over information collected by a third party other than the major rating agencies, and they get an idea of whether or not you're qualified to go ahead and take this loan. Legally, they don't even have to ask permission to do that because, in theory, it's not going to affect your credit score. A hard credit pull is actually going to one of the major reporting agencies. And of course, that will affect your credit score. But it's important to understand that in the pre-qualification, the lender only does a soft credit pull. Now, once you take the loan, that is the equivalent of a hard credit pull as well. Depending on how much of a loan you take and the health of your business, the impact to your credit score will vary. But if you complete the loan and then pay it all the way back, that can actually help improve your credit score a few months later. But just be aware that the process of applying and then taking the loan will have an impact on your credit. So just what do customers think about working with Fundera? How good of a job do they do in their customer service? Let's take a closer look at the feedback they've received over the years. Trustpilot shows that Fundera has over 800 reviews and a very strong 4.6 rating. I'm noticing here that 88% of the reviews have Fundera as a 5-star excellent review. Only 3% of the responses rated Fundera as 1-star or bad. I need to point out how impressive that is. Fundera's track record shows the lowest percentage of 1-star reviews of any alternative lender that I have researched. And most of those 1-star reviews have active, personalized responses from a company representative. This is a very strong showing. Meanwhile, the positive reviews are glowing. They often mention the customer service rep by name, and it's very clear that this company knows how to provide a satisfying experience for customers. If you want more details about Fundera, check out the full review on finimpact.com.